Meet Jake. Jake's been in the market for about 8 months, which by Wall Street standards makes him basically a newborn who just found the buy button. But here's the insane part. Jake's portfolio is up 220% in the last 3 months. He got Tesla right, he got Nvidia right, and now Jake thinks he's the next Warren Buffett.
And hey, quick question. If you've ever hit a few winning trades and suddenly felt like you figured out the market, hit subscribe. Because this story, it's not about Jake. It's about what happens to people when luck starts feeling like skill.
Jake's hobbies include posting stock predictions on TikTok, saying this is just the beginning, and explaining market cycles to people who didn't ask. He's got a small following now, a few thousand people watching his every move. Every trade he posts goes up. Every opinion he shares gets likes. And just like that, Jake stops thinking he's lucky and starts thinking he's right. And when you believe you're right, you don't manage risk. You start collecting applause. Here's the dangerous part. In the market, confidence grows faster than skill. Skill is slow. Skill comes from losses, boring research, and years of getting humbled. But confidence can be built in a week. All it takes is a green chart and people in your comments calling you a genius for you to start having delusions. Jake isn't just trading anymore. He's performing. He starts saying things like, I don't chase, I position. This move was obvious. I called this weeks ago. And his followers? They copy every move. So if you know someone acting exactly like Jake right now, send them this video before the market teaches them for free. Jake does what every new genius does. He sizes up. No more small positions. No more safe plays. Now he's going big. He starts going all in on high-growth tech, doubles down on momentum trades, buys every dip, because stocks only go up. And the wildest part? It keeps working. Because when the whole market is flying, even dumb decisions look like genius strategies. High risk goes up faster, so the rookie starts outperforming without actually understanding what's happening. This is where the trap locks in.
Then Jake gets his first warning sign. One day, a trade goes against him. Just a little. He's down 6%. Old Jake would have said, okay, bad trade, I'm out. But new Jake says, it's just a shakeout. So he holds. Then it bounces. And Jake doesn't learn humility. He learns the wrong lesson. See, I was right to hold. That moment, right there, is where most traders become addicted, because the market rewarded a bad habit.
Then one morning, the market opens red. Not just red, blood red. Inflation data comes in hot, interest rates are rising, and suddenly, those can't-lose stocks, they start dropping. 5%, 10%, 20%. Jake doesn't sell because geniuses don't panic, right? So he buys more. He posts on TikTok, big opportunity, loading. His followers cheer, buy the dip, we ride. Then it drops again, and again, and again. And Jake keeps buying because he's not just trying to make money anymore. He's trying to prove he was right. Now, here's where it gets ugly. Jake wasn't only all in. He was using leverage, margin. Because when you're up 220%, you start believing rules are for other people. And margin doesn't care about your confidence. One more red day, and your broker doesn't ask how you feel. It just sends you a message. Deposit more funds, or we will liquidate your position. Jake tells himself, they won't liquidate. I'll just wait. But the market keeps falling. And then it happens. Positions get sold automatically at the worst possible moment. Jake didn't choose to sell. He got forced to. And that's when traders realize, you don't control risk. Risk controls you. Fast forward 2 weeks. Jake's portfolio is down 68%. His comment section?
not so friendly anymore. Bro, what happened? I thought you said buy the dip. Are you still holding? Jake's latest post? Silence. No explanation, no updates, no accountability. Because it's easy to talk when the chart is green, but when the chart is red, confidence turns into shame.
So here's the question. Why do people like Jake win so easily and then lose everything just as fast? Psychologists call it the Dunning-Kruger effect. People with low experience tend to overestimate their ability, while people with real experience underestimate theirs. In simple terms, the less you know, the more confident you feel. But there's another trap too. It's called survivorship bias. You only see the winners. You see the traders posting screenshots of big gains. You don't see the thousands of people who tried the same thing and blew up quietly. A bull market creates fake geniuses, because when everything rises, the market disguises luck as skill. And here's the real problem. The strategy that makes you rich in a bull market is the exact strategy that destroys you in a downturn. In a rising market, Jake looks like a genius. But when the market turns, Jake becomes the lesson. Because at the end of the day, everyone's a genius in a bull market. So tell me in the comments, have you ever confused luck with skill in the market? And if you want more psychology-backed investing lessons like this, subscribe now.